In this video, you are going to see how I made $2,500 traded New Zealand dollar, US dollar on my FTMO. So I'm going to firstly break down the reasoning for the trade and kind of what wanted to make me get into it. And then we'll go over to the actual chart entry itself, just so you can see. Now, if you've followed me for a while, you'll know this is my strategy. If you haven't, this might be new to you, but I basically trade the US dollar index and the Japanese yen basket, which are two strength indicators for the currencies. The reason I do this is that I can time my entries based on strength or weakness of another currency and then pair them against each other to obviously see what my entry would be and obviously use a bit of correlation as well. So the actual zone in mind looks like it lost, but it really didn't. So this is what I was looking at. The US dollar had obviously been moving strongly to the downside. Just to let you know, blue zones are wins, red zones are losses. So you can see the win rate is kind of ridiculous. But basically, the dollar had been moving down for quite some time, and then finally has obviously started making some bullish market structure, which obviously always helps the bias. The main reason for the trade was a break and retest of this structure point. The members saw why I chose to enter earlier on, but basically the main basis is that the dollar was doing a break and retest of a previous level. You can see historically the exact same happened here with a trade I entered there, and following that, obviously we got a big push to the upside. So it's the exact same thought process with a couple of other confluences that obviously I paired alongside that. As always, this trade was called as I took it and before I took it, so the members themselves were obviously able to kind of benefit from this as well. So what can we see? Dollar started coming down in quite an aggressive manner, actually. So what happened was price pushed into this zone, and if we have a look, the zone size here is about 20 points. So what I personally like to do is when I'm using correlation, and this might work for your own strategy, if I'm using a correlating pair, I will basically double the stop loss to be double the size of the zone size. So this zone here was 20 pips, so I decided my stop loss would be 40 on my correlating pair. If you can see what happened, the dollar actually continued to push down. So if we look, this happened. I did take a position from here, but this is going to be in next week's video that I do on the Wednesday, but we are focusing on this zone here. It looks on face value like it lost, but let's see if it actually did. If we go into New Zealand dollar, US dollar, as price was pushing down into that dollar zone, the New Zealand dollar, US dollar was actually trading up into this weakness zone here. So as I expected the dollar to get strong, New Zealand dollar was entering an area that I thought was about to get weak. So this is literally the reason for entry. If my yen basket or DXY is at a zone of confluence, then all I am going to do is following that is pair that off against another pair and enter. What do we see happened? Well, the dollar started getting weak, didn't it? Which meant technically this pair should go up. What happened? Exactly that. The price started pushing up, and I was thinking, you know what? This might just be a loss. I did have this area here as kind of like a last case resort, but that wasn't the reason for the stop loss. We've gone over why that was there. And then basically what happened was I was in this trade for quite some time. Then going into the day session, price then pushed down and ended up hitting my target, which did obviously bank me 2% on my live account and 2.5k on the FTMO. So it was overall a really good trade. So let's just recap. US dollar coming into an area of strength. That should bring down any XXX USD pairs. Australian dollar yen, New Zealand dollar yen, euro yen, dollar. So Australian dollar, US dollar, euro, US dollar, pound, US dollar, etc. If the DXY is going to get strong, then the currency pairs should get weak. And obviously, in the end, that's what happened. It was a bit of a delayed reaction, but either way, my stop loss placement was perfect. It covered me. I do not mind being in a trade for over 24 hours. If I'm making, this is the mindset that I don't get with some people. Everybody wants to trade the 1 minute time frame, the 5 minute time frame, the 15-minute time frame because it's quick and easy. And well, it's not easy at all. It's quick, but that's another story. People want this because you're in and out. It's quick money. People will work in the United Kingdom 30 days to get paid £2,000. This trade here lasted 24 hours and did $2,500. So in 24 hours, you've made what some people make in a month with their 9 to 5. So why do people back away from the 4 hour and the daily? People want this quick money and then wonder why they're not profitable. It's because you're chasing the money, you're chasing the opportunities. I might take 3 trades in a week. Some weeks I might not take anything. People in the 1 minute are taking, 5, 10 trades a day and wondering why they keep going into profit, then draw down, then profit, then draw down, because you're not being patient. Be patient, take the best setups, get a strategy that gives you an edge. And if you've got to be in a trade for 24 hours to make $2,500, if you see that as a bad thing, then you probably need to reevaluate your mindset when it comes to trading and take it that way. So that is a breakdown of how I made the 2% on my live and the 2,500 on my funded. All trades were called before being taken, so the links are below if you want to join. But there's also a free group if you just want to obviously keep up to date with what I'm doing. So any questions, please drop them below, and I'll see you in the next